Matt Christensen. I am managing partner here at Hansen St. I also practice in the area of banking and real estate, bankruptcy, small business sorts of things. Today is specific to small businesses. It's not the first seminar that we've put on. Since April, I think there's probably 10 or 15 different topics that we've tried to cover and some short informational courses. We will be continuing these, not necessarily COVID related, moving forward, just short 5-10 minute recordings on different areas of the law that people may have some interest in. We always have to preface this with a statement that we're providing some general legal concepts. They aren't specific to any one party's situation. And if you do have specific questions about your own businesses or asking for a friend or whatever, we're happy to talk to you separately about those. So as I mentioned today, focus on small businesses. I've talked about small businesses in the past, and a lot of the previous presentations dealt with the benefits programs that the federal government had put into place and or tips for kind of keeping your business open, things to do to examine your business documents and that sort of thing. What I'm focusing a little bit more on today is businesses that aren't open in Idaho, at least right now. Bars, some restaurants, potentially gyms, I think is next up for consideration. So I'm trying to talk about options that those businesses may have that aren't actually operating and open right now. As far as employees go, there's plenty of employee benefits that were out there. Some have been discontinued. There were PPP loans that we've talked about that are there mostly to pay lease payments and pay payroll. Those obviously work better when you have an operating business. There's unemployment benefits that were available for those employees. So I'm not focusing so much on the employees themselves, because there are ways that they can be addressed, but this is more for the business. There is what's called economic injury disaster loans, EIDLs, that the federal government, Small Business Administration, administers. The COVID situation qualifies as a disaster to trigger the ability to get those loans. You don't have to be operating the business to qualify, but they do require collateral, they do require personal guarantees, that sort of thing. But those may be options if your business has a good chance of surviving and can handle that loan. Generally, they're 30-year loans. The interest rates are fairly low. So if this is the sort of thing you need to request or apply for, there are several banks in the area that process those. Other options, and I'm trying to work through each of these different options as far as the impact on the business. So from fairly low impact to fairly deep impact at the other end. So the first options, and probably the most important for some of these operating businesses, is I have continuing lease payments, whether it's leases for building space or lease of equipment. Those need to be paid. Maybe you own the property where the business is operating, so there's a loan payment. Maybe there's a loan payment for equipment, a line of credit payment. Those sorts of things, especially when the business is closed, are going to be important to address. Working with your lenders or your landlords will be important. Having an open dialogue with them, letting them know what the situation is. Request for all of them, if it's a lease payment that you're making, some sort of abatement of the lease payment until you can get the business operating again. If you can't get an abatement, is basically, I don't have to pay that lease payment for those months. Deferral would be, I don't have to pay those lease payments until I get back into business again. If you're doing a deferral situation, you want to make sure that you can handle the increase, whether it's an increase in the lease payment moving forward, whether it's, hey, I'm going to make 2 extra lease payments a year for 2 years till 4 months of time is paid off. Whatever the terms of that are, make sure that you understand the terms and can comply with them moving forward. If you can get just the abatement of the lease payments, that's obviously the most beneficial. You don't have to worry about paying those moving forward. Loan situations, same sort of thing. Keep the communication with your lender open. Make sure you're communicating with them, letting them know what's happening. Those loans probably have a lien on equipment or your inventory or your building space or even your lease space if you're leasing the business. And so those lenders will start foreclosing on those sorts of things if you're not working with them. Every lender in the country right now, I think, is going through these sort of situations. And I always have banker friends of mine say, look, we're not in the business of operating businesses. We're in the business of getting paid our money back. And so if there's a way to work with that lender and get them paid back, they'd rather do that than have to foreclose and get the property back. So look at those options, work out some kind of agreements with them to the extent you can. There's also, many businesses will have insurance policies that insure the buildings, insure a general liability policy, or you may have some sort of personal injury policy. I think every business that's being shut down in some manner needs to examine those insurance policies and look for what's called business interruption insurance. This is a form of insurance that covers your business being interrupted for some reason. The policies right now, most of them will require and are being denied because they require some sort of property damage to your property that is what causes the business interruption. Right now, because the business is interrupted because the government said you can't open your business, there's not necessarily any actual property damage, and so many of these claims are being denied on that basis. There's also an exclusion in almost all of these business interruption policies that excludes damages caused by viruses or pandemics, and so many policy claims are being denied on that basis. The issue is, if you do have some sort of business interruption insurance, there's almost always a requirement in there that you provide a notice of a claim to the insurer within a certain period of time. And if you don't, then you don't have any right to coverage on those things. So whether or not the insurer denies a claim because there's no property damage or denies it because it's a virus, if you don't even make a claim to that insurer, they are free to deny it because you didn't comply with the claim notice provisions. And so review that policy. If you do have that sort of insurance, at least get a claim made to that insurer. Whether or not they deny it later, you would still have the ability to pursue a litigation to get that covered or some portion of it covered. There's also several states and the federal government that are looking at legislation to require coverage under a business interruption policy. Whether those statutes get passed or not, or are unchallenged or not, is still up in the air. But if you don't even make a claim under that policy, then you'll definitely not have any coverage of that claim. So examine those sorts of things and figure out if your business has that sort of insurance coverage. If for some reason you can't get the landlord or the lender or the lessor to work with you while the business is closed, the final option that I'll talk about is a bankruptcy case. Chapter 11 bankruptcy are for some reason, most small businesses seem afraid of Chapter 11 bankruptcy. I'm not sure why. Many of the biggest companies in the country filed the Chapter 11 bankruptcy the first week in April, when the pandemic first hit, because they knew it's a good tool for restructuring those debts. That's the whole point of a Chapter 11 case, is to reorganize the business, to restructure the debts and get them paid in a different manner than the contract documents necessarily require. Congress increased the debt limits for a small business Chapter 11 case with the first CARES Act and allowed the business to have up to $7.5 million in debts in order to qualify for the small business provisions. Last year, Congress passed a change to the bankruptcy code, which allows a small business to participate in a Chapter 11 case on a much more streamlined basis. It's easier to get into the case, it's easier to propose a bankruptcy restructuring plan, and it's easier to get it confirmed versus the other normal Chapter 11 processes. A Chapter 11 case, even for a business that's not currently operating, can still be successful. The filing of the bankruptcy will help get some of those landlords and creditors to back off their demands for payments. It allows the debtor time to put together a plan. You have to propose a plan within 90 days of filing the bankruptcy case. And many of these small businesses, 90 days from now, they may be back open and fully operating, in which case filing a Chapter 11 plan would be a simple process. Even if you're not fully operating, you could still propose a bankruptcy plan that allows you time to catch up those payments after you're able to reopen the business. But it gets you sort of another partner on your side in the bankruptcy court to be able to reorganize and keep your business afloat, especially if it's a good business. If it's one that was successful prior to the pandemic hitting and can be successful afterwards, I think that's a perfectly valid option. It's the last option on my list. I always tell clients that come in bankruptcy that there's absolutely nothing wrong with bankruptcy being your last option. You're sort of, hey, I tried everything else. What makes a bankruptcy unsuccessful is when that bankruptcy is your last minute option. In other words, I have something coming, I've got the bank that's foreclosing on the property now, or foreclosing on all of our equipment, and they're coming in tomorrow to take all those things. That's what a last minute option is. If you can't work things out with the bank and they start the foreclosure process, that's the time to pull the trigger and take that next step. So I think for each of those businesses that aren't open now, whether it's a bar, whether it's a restaurant, whether it's a gym that maybe come close soon, whether it's any other sort of business that's struggling because it can't properly operate, each of those options is a valid option and should be pursued to the extent possible by those businesses.